Hey everyone, just me today. Casey is busy putting together some charts, some data, working on that semiconductor manufacturing equipment index for all of you, which leaves me here to talk about our first quarterly earnings report for Q1 2023, ASML Holding. I thought we'd do something a little bit different, prompted by a few comments that I got, a few questions I got on Twitter and here on the community board on YouTube. A number of you have asked for some reasons why not to buy ASML stock. What are some reasons not to buy the company, not to invest in the company? What are some things that could go wrong? I think that is absolutely brilliant. Of course, we own ASML here, a core holding in our semiconductor chip stock investor portfolio. But it's still really important to go over what could go wrong with the businesses we invest in. Doing so makes us a smarter investor, makes us more well-rounded. As one viewer put it, they cannot find much information against ASML out there on the internet, and that can be really dangerous. So let's get to it. Let's review some things that could go wrong with our investment in ASML Holding. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. If you're unfamiliar with who ASML is, that is the Dutch company that has a monopoly on extreme ultraviolet, or EUV, lithography equipment. Only a handful of semiconductor manufacturers use this equipment from ASML to create the very, very tiny microscopic features on chips. These are the most advanced chips, the most power efficient chips that power things like the Apple iPhone, and also think like those very powerful data center chips from NVIDIA that power some of those new AI services that are popping up all over the place, like Chat GPT. Now, because ASML has a monopoly on this EUV equipment, it tends to trade for a very high premium compared to some of its peers in the semiconductor manufacturing equipment space. Companies like Applied Materials, another one of our favorites here. Now, this seems very obvious, but I think it's worth pointing out anyways. That premium valuation could be problematic. When we were buying ASML stock here at Chip Stock Investor back in October and November 2022, that valuation was what we thought was very cheap given the long-term outlook. Share price has gone from sub 400 to over 600 in roughly 6 months. After the first quarter 2023 earnings report, ASML stock still trades for over 30 times trailing 12-month free cash flow, nearly 36 times trailing 12-month earnings per share. Now, it was a good report. Management said it's still on track to deliver what it thinks will be 25% revenue growth this year as it laps a pretty ugly 2022. Remember, it was still being affected by chip and component shortages. It couldn't get enough machines out the door to its customers. Nevertheless, even with that growth outlook for the next year and into, I think, at least the first half of 2024, I think the market has basically priced in all of that growth for this year and at least a quarter or two into 2024. Stock prices only go up. They only appreciate as the market gets wind of an improving financial outlook from management. And at this point, things are a little bit fuzzy headed into as we start looking at financials into 2024. So again, I think the growth is already priced in at this point. The stock price has very little or possibly no upside from here unless we get some positive improvements in the financial outlook further out into 2024. Which leads me to bear thesis number 2, a reason not to invest in ASML Holding. Its backlog of equipment is shrinking. Now, backlog is basically orders that have been placed by customers that ASML has not shipped out the door or has not recorded revenue for yet. And ASML doesn't record revenue until not just when it ships the equipment out the door, but when those EUV machines are actually installed in the fab and has been accepted by their customer. Now, this backlog was quite large at the end of 2022. Again, component shortages, the backlog was growing because orders kept coming in and ASML wasn't able to fulfill all of them. So at the end of 2022, the backlog was over 40 billion euros. Now, at the end of the first quarter of 2023, that backlog is actually down below 39 billion euros. Below 39 billion euros. The backlog is shrinking. Now, here's the good news. Almost 39 billion euros is basically a year and a half's worth of backlog for ASML. That's the good news. Basically, the company's ability to supply machines is lower than the demand at this point. So it does appear that management's expectation for 25% revenue growth this year and into the first quarter, maybe the second quarter of 2024 is intact thanks to that backlog of orders that are still in existence. But the backlog shrinking is something to keep an eye on here. Basically, in the pre-recorded earnings call and then the Q&A session that ASML fielded from analysts, their indication basically was that they still see lots of demand from customers well into 2024. But some of those orders, some of those new orders coming in for further out into 2024, it looks like are on hold for the moment. This of course can be easily explained because there's some recessionary forces, macroeconomic issues with the global economy this year. A lot of companies might just be hitting the pause button to see how this year goes before they commit to making an order a year and a half or more down the road. They're basically in cash savings mode. And ASML management expressed confidence that those new orders for the second half of 2024 and beyond will eventually be placed based on what they can see with the customer technological roadmap for new chip manufacturing. But at this point, those orders aren't being placed yet. Depending on how bad the economy gets this year, maybe there's a recession, maybe it's a mild recession, maybe it's worse than expected. That could affect the cadence of orders being placed into 2024. Something to keep an eye on going forward that could affect that premium valuation that ASML fetches going forward. And my third reason to be very cautious, perhaps even bearish on ASML is this company is highly reliant on just three customers for its EUV extreme ultraviolet lithography equipment: Taiwan Semiconductor Manufacturing, Samsung, and Intel. Now, whenever there's high customer concentration, that can be problematic. In the semiconductor industry, this often isn't too much of a problem because these companies, these chip companies, chip manufacturers make plans many, many years in advance. And so you get a lot of visibility into future demand. However, I do see some problems with these three particular customers. Obviously, the first one, Taiwan Semiconductor Manufacturing in Taiwan, that is a huge customer. Obviously, the world's far and away the world's largest manufacturer of advanced chips. If something were to happen to Taiwan, perhaps there's some invasion from China, mainland China, at some point in the future, that could be a huge issue for ASML. A top customer getting disrupted like that would be bad news. Samsung, of course, also going through some issues right now with the chip downturn. It was cutting production on memory chips. It just announced within the last couple of weeks. Maybe they cut some of their capital expenditures on some of that EUV equipment. And then, of course, Intel, obviously not in the best of financial shape either. Any delays or hiccups at Intel could also put a damper on ASML's growth from the EUV lithography market. And then also in the deep ultraviolet lithography market, that's the older generation machines. There is actually some competition there. Canon and Nikon, um, the two Japanese companies that historically are, dabble in photography technology, but ultraviolet light, something that they've been doing, lithography, something they've been doing for many years. Neither of them, neither Canon nor Nikon, do anything with EUV. But Canon in particular has been working on some technology called nano imprint lithography that could potentially, maybe in 2024, be a competitive force against extreme ultraviolet lithography. Now, there are some issues with this nano imprint lithography, as far as we can tell, that Canon is working on. It is a very different technology. It may not work as well as EUV lithography, but perhaps some customers might be willing to give it a shot. Remember, ASML's equipment is very expensive. Only 17 EUV systems uh, in the first quarter of 2023 made up 2.9 billion euros in revenue. That's over 170 million euros per EUV system. Suffice to say, that is ridiculously expensive. And if another company, maybe Canon, maybe Nikon, maybe someone else, there are dozens of semiconductor manufacturing equipment companies out there. Maybe one of these companies has a technological breakthrough, and maybe it's not in EUV lithography, but maybe it's a similar technology that can maybe act as some sort of replacement for EUV lithography and help Moore's law, the shrinking of the features on chips, continue, but down a different path other than ASML's highest end tech. So another thing that could go wrong for ASML, uh, I'm not saying competition is bad, actually far from it. I think competition is a good thing. It prevents businesses from getting lazy. Lazy businesses are dead businesses. So I think some competition would be good, and maybe some extra competition would help further the technological advancement of ASML. But always be on the lookout for a curveball, especially for a company like this that has a monopoly in one particular part of the market. And that monopoly is large and highly profitable. A lot of companies are going to be gunning for that to get a piece of that pie. That's it. There's my top reasons not to buy ASML stock right now. And in fact, I will disclose this. Um, After the big run up, since we started buying it in October of last year, ASML has grown into a over 1.5% position of my total portfolio, nearly 9% position in just the chip stock investor portfolio. So I'm not buying right now. I think the stock is fairly priced, and I'm waiting to see some signs of further upside in the business before I consider buying more. But I still like the company's long-term potential, but it's important to bear in mind reasons things could go wrong for ASML. So there you go. There you have it. Thanks for tuning in. If you're not subscribed already, make sure you do so. We've got more earnings coverage coming up this year. Also, we drink a lot of coffee here. So if you'd like to contribute to our coffee fund, link to that is below in the description. Thanks, everyone. See you again real soon.